Tax is money collected by the government that is used to provide Australian citizens with important services such as roads, schools, hospitals and public transport. GST, or Goods and Services Tax, is paid by all Australian consumers both nationally and internationally. That is, anyone who wants to purchase a product or use a service in Australia must pay GST. It is an additional amount of money added on top of most items and services that we use every day and is charged at 10% of the item's original cost. At present, there are a number of essential goods and services that the government has made exempt from GST, such as all standard or non-processed breads, milk, fruits, meats, water and sanitary and toiletry products. You can visit the Australian Tax Office website, shown here, to learn more about how GST works in Australia. Let's explore the image shown here to discover who is responsible for paying GST and where the tax money goes. As a start, we now know that GST is charged at 10% on most goods and services that are consumed within Australia. So when is it applied? And how does it work? Firstly, companies or businesses will either import or manufacture the products available to be sold. The manufacturers will then sell their products to the wholesaler, who are the people that distribute the products to the shops where consumers can buy them. And when they do this, they will charge the wholesaler GST at 10%. The wholesaler will then on-sell these products to the shops where consumers can purchase them from. Again, the wholesaler will charge the retailers and service providers GST charged at 10% of the cost from the wholesaler. The retail and service providers then on-sell to their customers. This is where everyday consumers are now charged 10% of the item's cost. The GST that's been collected along the way is now given to the Australian Tax Office. It's then combined with any GST that has been paid by our international consumers into the total GST collected. This is then passed on to the Australian government, who distributes the tax money back into the states and territories in the form of essential services that we require, such as roads, housing, public transport, police and ambulance, which are all then used by us. We will now explore an example of the GST collection process. Let's consider a local wool farmer. He is producing wool from the sheep on his farm, which he is then selling to the clothing manufacturer for a total of $10. This means he must apply 10% of the item's cost in GST. 10% of $10 equaling $1. So the local wool farmer will charge the clothing manufacturer GST of $1, which is then collected by the Australian Tax Office. From here, the clothing manufacturer will be producing a jumper that they will then on-sell to the retailers for the consumers to be able to purchase. Since they purchased the wool for $10, the clothing manufacturer will now increase the price of the jumper they produce to ensure they make a profit. They have set the jumper's price at $20 and GST must be applied to this amount, charged at 10%. So 10% of $20 gives us $2 GST payable and a total for the jumper of $22. Remember, the clothing manufacturer has already paid $1 GST to the Australian Tax Office. So now that they are selling the item on themselves and have to apply a new GST amount, the total that the tax office will collect is the GST charged at $2 less any GST already paid. And so the total collected by the tax office this time is $1. From here, the retailers will now sell the product on to us. Again, they need to make a profit, and so they will increase the price of the jumper from the $22 that they have purchased it for to $100 on the shelf. Again, they need to charge GST on the item's cost, and so 10% of $100 is equal to a total of $10 GST payable. But remembering the retailer has already paid $2 in GST, and so the total that will be collected by the tax office is the GST paid by the consumers at $10 minus the GST that was already paid for of $2, and so the total collected this time is $8. You can see that the tax office has now collected a total of $10 in GST applicable on the item's total cost. And if we check back what the consumer ends up paying for the item and the GST that is listed on their receipt is exactly 10% of the item's final purchase value. And we can see that the consumer ends up covering the cost of the GST applicable by all the manufacturers and retailers along the way. Now let's look at two mathematical examples, one which requires us to calculate the GST payable and one where the GST has already been applied. In this first example, a retailer purchases their new clothing range from the wholesaler and on-sells the stock to their customers. We are required to calculate the GST that would be payable on a dress that originally cost the wholesaler $95, excluding GST. The word excluding tells me that the GST has not been applied yet, and so to calculate the amount that must be now added on top, I need to find 10% of the item's original cost, that being $95, giving me a total GST payable of $9.50. Now we are being asked to calculate the new price of a pair of shoes that were originally purchased for $115 excluding GST. This time, not only do I have to find 10% of $115 to calculate the GST that must be paid, that being $11.50, but I now must add that to the original price of the shoes to get the total cost, giving me a total of $126.50. As a side note, if we wanted to do this process in one step, we also know that this is asking us to find 110% of the original item's cost, which was $115. So I could have calculated $115 times 110% to automatically add in the GST price, giving me the same new total. In this final example, the GST has already been included in all of the costs we are looking at. Firstly, we are asked to calculate the GST that was paid on a job that a plumber has done for his customers that was charged at $210, with this price including GST. As we just saw before, This means that the GST has already been applied at 10% of the item's original cost, and so the $210 is equal to 110% of the original item's cost. We need to know what 10% was, as this is the total cost of the GST. To do this, if I divide 110% by 11, it will give me 10%, which is what I'm looking for. And so if I'm going to do that to the percentage, then I need to do that to the dollar amount as well. And so if I divide $210 by 11 to bring it down to 10%, the total GST paid for the job was $19.09 when rounded. And this gives us a handy little trick that if we want to find the GST that has already been applied, we simply divide the cost of the item by 11. In this final part, we are being asked to calculate the price before the GST was applied if the plumber charged his customer a total of $680, including the GST. As we saw above, that $680 is equal to 110% of the original item's cost, and what we're looking for is the original 100%. And so just as we did above, we are trying to find a strategy to bring 110% back down to 100% or the original item's value. If I divide the cost in front of me by 11 to find the GST that has been applied to this item, I know that the item's original cost would have been 10 times bigger than this, since GST is always charged at 10%, and 10% times 10 is 100%. This means that the strategy we can use to find the pre-GST cost is to divide the total cost by 11 and multiply this answer by 10 to find the original cost. And in doing this to $680, we get an original pre-GST cost of $618.18 when rounded.